Bajaj Auto falls over 10% and takes other auto stocks with it, and it is the top loser on the Nifty as well. And concerns over margins and festive demand outlook. The management tells CNBC-TV18 that the first half of the festive season has been slightly below expectations, pulling stocks of two-wheeler peers lower on fears of an industry slowdown.
Nalco is higher in trade, outperforming today's trading session following China's housing ministry comments that they will monetize urbanization projects. The stock also rises on tailwinds coming in from aluminium major Alcoa, who posted very strong numbers, and also the commentary on the alumina market was very strong.
Rail Vikas Nigam had once surged over 5% but is off the highs of the day after the company emerged as the lowest bidder for a project worth 270 crore rupees from the Maharashtra Metro Rail Corporation.
CRISIL rallies close to 2% as it reports margin expansion and 13% profit growth in Q3 as the rating service vertical outperforms.
And Infosys is outperforming in a rather weak market because second quarter numbers were better than expectations. The company also maintains its above industry average growth forecast and a margin guidance of 14.5% to 16%.
Hello and welcome to Chartbusters. Well, the bears are busting the charts today. I'm Nigel. With me is Hormuz, who's in the color of the day. Hormuz, it appears you're more towards red than green today. The markets are down. The problem is all the indices are seeing selling pressure. And I think, on the two-wheeler major Bajaj Auto, the problem is not just Bajaj Auto. The street is reading it through. Is there a slowdown inside? Have we not built into something like this? So I think not just Bajaj Auto or the two-wheeler pack. The fear is there a slowdown in the economy which has been ignored?
That's not the taking everybody along with you is the kind of definition you'd want to see on a stock like Bajaj Auto and the entire auto sector. But yes, the color of the market today is red. It's the weekly expiry for the Nifty. And at the start of the week, we were looking to test higher levels of the range. Now we are testing lower levels of this range. Now nearing 24,800, had briefly slipped below that level as well intraday. Now 24,830 is where the Nifty lies. So the lower levels, the September 9 low of 24,750, and of course the very recent October 7 low of 24,690 come into play. The Nifty Bank too in the red, 1% down now, nearing levels of 51,200, but it is Realty and Auto that are leading the losses.
Okay, all right. Well, let's get a quick technical check then on the market. Sachidanand Utekar joins us. Hi, Sachi. Good morning. Good to see you, Ben. Sachi, what would you do? Yeah, if you wanted a dip, you're getting that dip. But do you believe that this dip is going to get a little bit excessive on the downside, maybe drag us down towards 24,400? So you would avoid buying both the Nifty and the Nifty Bank?
Good morning, Nigel. Good morning, Hormuz. Clearly, I think the market is consolidating. When we look at the data of Nifty, 25,000 still remains a very decisive level on the higher side, which needs a confirmatory close about 25,050 to unlock that directional momentum play. But when you look at supports, there are a lot of shock absorbers right up to 24,500. So I think this particular decline that we are getting is still considered healthy. From a trading perspective, I don't see this support of 24,800 to be violated today. And probably we may see the Nifty again recovering back to that 24,940, 960 kind of a zone. So I think most of the shocks have been absorbed. We have Reliance, which has moved from the extreme lows. We have the Nifty, the banking constituents, rightly positioned. And we have IT now again contributing on the higher side. So probably we may see a good turnaround going forward. And that's why we are recommending building long positions here. Even from a intraday perspective, I think this support or the floor at 24,800 may not be violated. And we may see a quick recovery towards 24,960.
Sachidanand, good morning. What about specific stocks then in this market?
Hormuz, I'm liking the setup of TCS now. In fact, most of the negative news has already been played out. We have been seeing this particular stock trending lower. But lately, it has managed to, give a decisive reversal formation near its 200-day exponential moving average support, which is placed somewhere close to around 4,100. The kind of five-wave structure decline that we have seen so far looks terminated, and we may see a good recovery in this particular counter. So we are, recommending building long positions here positionally for a target of around 4,300. disclosure would be that we have communicated the same to our clients as well. The stop loss for the trade should be placed at around 4085 on a closing basis. The other stock which is looking confident right now, it is consolidating, is PVR Inox. Now, if you look at the overall structure, again on the weekly scale, we did see a decline, but for the last 4 trading sessions, we have seen a very strong base building action at around 1600 levels. We are anticipating that sooner or later this particular stock may again revive its bullish move, and we may see the stock again trending back to that 1740, 1800 kind of a zone. And that's why we are recommending building long positions here. The stop loss for the trade should be placed at around 1585 on a closing basis, and 1740 would be a positional target.
All right, Sachitanand, thank you so much for your views on the index and on specific stocks as well. Shifting focus to our special segment then, where we get you a few ideas for profit from Money Control Pro. Neha Dave is joining us to talk about a stock that she is tracking very closely.
Today's stock idea is the CSB Bank. The stock has significantly underperformed the broader benchmark year to date, and one of the reasons has been muted earnings performance by the bank in the last quarter. CSB Bank's return on asset declined to 1.3% in Q1 FY25. The key question is then, why consider the bank? That is because the future guidance is very encouraging. The management has guided for improvement in margins, asset quality as well as cost to income ratio going forward. The bank is confident of achieving return on asset of 1.5 to 1.8% in FY25. While the guidance is positive, the real reason to consider CSB Bank is because of its gold loan portfolio that constitutes around 50% of its loan book. Thanks to high yield on gold loans, the bank could manage to report margins above 4% in Q1 FY25 despite a rise in the cost of the funds. The bank has lower credit cost mainly because of its gold loan portfolio. And while capital is not a constraint for the bank because it has a capital adequacy ratio of around 23% and has a strong parentage of the Fairfax Group, the lending against the gold helps the bank to conserve capital due to lower risk weight on the gold loans. Overall, the bank immensely benefits because of its gold loan portfolio that offers higher yields, lower credit cost and lower risk weights. In terms of valuation, the bank is currently trading at around 1.1 time estimated book value for FY26. The valuation is attractive considering the guidance of improvement in the return ratios and growth potential on a small balance sheet. While the execution risk remains, valuation re-rating along with the earnings growth can drive the stock upside.
Time for a short break here on Chartbusters. Up next, Kumar Taurani, who is the Managing Director of Tips Music, will join us to discuss the company's second quarter results and the road ahead. Stay tuned, back on the other side.
Welcome back. Well, let's focus on earnings then. We have entertainment company Tips Music. The company saw a growth of closer on 30%. Profits as well were up close to 20%, even though content cost has spiked up. To tell us more about the quarter gone by, we're now joined by the MD of the company, Mr. Kumar Taurani. Hi, Mr. Taurani. Good morning. Always good to see you win. It's a healthy 32% growth that you've delivered on a Y-on-Y basis. Could you tell us which revenue stream is driving growth for you? Break it up for us. Subscription, advertising, music rights.
At present, I think it's advertising is more than subscription, but subscription is increasing, and there is two main players is there YouTube and Spotify. Plus, I feel ki my library, my content of from when we started from 1988 till to 2020, whatever we have, we think as this is our repertoire music, catalog music, so that's really doing very well. So that's the main advantage we have, and that's responding, and that is really giving us huge revenues.
Mr. Taurani, good morning. Thank you so much for joining in. You know, in your previous interactions that you've spoken to us as well, you've emphasized on the fact that you're going to focus on quality over quantity in FY25. Now, there is this fear that this might result in a bit of a slowdown in your long-term growth rates for the year. Now, you've grown 32% this quarter. Do you expect that to sustain in the second half of the year as well?
Yeah, actually, please, I also told you, please treat us as a yearly company because we don't have a new releases in our control. We have to, it's linked with the film release. See, in first quarter or beginning of this year, fourth quarter of last year, we have two back-to-back hits, Crew and Ishq Vishk. So musically, they done very, very well. So we don't know, we can't control our releases. So non-film we can control. And if you see recently, we are releasing many good non-film music. But we have to relate on the film. So treat us as a yearly player. And whatever I feel, 30% we should grow by top line or bottom line. We are achieving this year as well.
Okay, all right, Mr. Taurani, it's good to see good amount of top line growth. The problem is the cash flows from operations. That's decreased considerably. Could you explain that to us? I can see the receivables have gone up. How do you see this aligning things?
No, I don't think so. I think cash flow will be good because we are actually giving a lot of dividends every quarter. First quarter we have given around 47 crores as buyback, and in that same quarter we have also given 25 crores as a dividend. This quarter also we are giving as a dividend. I think in totality around 97 crores we have already given. So maybe maybe you've seen that. Maybe you have not seen that.
What about margins, Mr. Taurani? What would you expect to end the year with? There has been a bit of a optically this decline on a year-on-year basis, but what do you expect to end the year with in terms of margins?
Our target is around 310 we should achieve as a top line revenue, and bottom line we are targeting for 165. But what I see now, I think we can even touch 170.
Okay, all right. Well, and the street likes what you're saying as well. As we speak, the stock is at the high point of the day. So big move is what we're seeing on that front. Well, also, if you could tell us, you had mentioned your market share improved for you. Could you tell us where is it now and where is it headed?
It's same the way, I think around 8-9%, whatever we have suggested in the monthly or quarterly presentations we do. It's same.
Okay, but there is also, yeah.
But I think in 1 or 2 years, our focus on just new releases, it will increase further. We are focusing on that.
All right, Mr. Taurani, I wanted to ask you an industry-wide question. Now, there's reports about consolidation going on in, the industry. The buzz about Saregama, Reliance, all of them eyeing Dharma Productions. What's your take on it? You own Tips Films as well. So could you tell us what is your view on this sort of inorganic or consolidation that could happen in the industry?
It's good for industry. We will have more players will come, join hands together, give quality products. So it's good for the industry, I feel.
And do you have any such inorganic acquisition plans, Mr. Taurani?
No, nothing. We are growing on our own, and we are still a mid-sized player. What I feel, and it's better for us. We can focus on our business and don't change our focus and grow the way we are growing.
All right, Mr. Taurani, you had that licensing deal with Warner Brothers, right?
Yeah.
What is the earning potential that we should expect in FY25? What kind of contribution as a % of the revenues are you factoring in this guidance that you're giving us?
See, Warner will contribute to my business around 35%. It's not this year, but next year onwards, we targeting that Warner should at least give us 35-40% business. And it will happen because our deal was signed in March, and to deliver content, to upload on other platforms. So it will take some time. So, but now from October onwards, we are online. Everything is there. Instagram took a lot of time, around 6 months to upload our content and come online. So it's all done now. I think from October onwards, we see a better number, but we have already calculated that revenue in that target, what we have fixed for ourselves. So that's coming. And next year, I think it will be better for us as a player and partner.
Okay, just one clarity, sir, I wanted from you with regard to the cash flow from operations. We're talking about cash flow from operations, not the overall cash flows. You had mentioned dividends, buybacks, that's X of that, right? So as of the half-year mark, it is lagging what we saw last year. Last year, your cash flow from operations was 230 crores. For this year, you're expecting things to align and cash flow from operations could be similar to what we saw last year or better?
Yeah, it will be better, absolutely.
All right, Mr. Tarani, we appreciate you joining in. You're sounding very, very optimistic about your business. You're saying if there is consolidation, it'll be good for your business as well. And on a day when the markets are down, the street has given the verdict. They like what you're saying or singing. The stock is up more than 13% as we speak. Thanks a lot for joining in.
And as we slip into a break, here is a programming note. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers, industry leaders, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. Don't miss your exclusive opportunity to be a part of the conversation that is shaping the future of business and innovation. Reserve your spot today. Welcome back. The Nifty has seen a slight recovery from where we started the show. We started at 24,830. We are at 24,850 now on the index. So some bit of recovery coming in from lower levels. But in a conversation with CNBC TV18, Shireen Bhan, Zerodha CEO Nitin Kamath comments about how the startup ecosystem in India is advancing and how Zerodha's founders are supporting these startups via venture capital. Listen.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like, there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that, you know. So, Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, you know, because I still haven't yet found the cause that I really want to support, as in, like, you know, something which is close to my heart. Yeah, so they're also very committed a significant portion of a capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
And Shireen also spoke to Zerodha's co-founder Nikhil Kamath, who spoke about the need for entrepreneurship in India and how Indian regulators need to encourage startups to drive growth. Let's listen to that.
So what's your bull case for India?
For India?
Yeah.
I don't know, maybe GDP per capita crossing $10,000. I feel like these things grow exponentially beyond a point when there is momentum behind them.
Yeah.
I feel like we need to be a lot more liberal as a country, and like what China did maybe in the 90s, they allowed people to go out there and build and make mistakes, and they were more forgiving as a government. I think we need that phase. I see a lot of people who have been punished for something around entrepreneurship. I think it should be that era of amnesty. If somebody has done something wrong, bring them back in. Like,
can I bring up an example? Are you talking about Paytm, for instance?
No, I'm not. I don't want to give any specific example, because I don't know the details of Paytm.
Okay.
But I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody's allowed to try. They have access to capital. When they make mistakes, they're forgiven. They pay a fine. They come back. They try. That somehow leads India to that $10,000 GDP per capita. And I think that benefits the entire country overall.
And you can catch the full interview on our special Young Turks Reloaded today at 7 p.m. Stay tuned for that on CNBC TV18.
Well, on that note, we'll wrap up on Chartbusters. You stay with us, though. Trading Hour comes up next.
The only reason we would want to IPO is because we are at the forefront of this, right? As in, we are a stockbroker.
I would say 50-50, more leaning towards no IPO today.
More leaning towards no IPO, Kailash?
I would lean heavily towards no IPO.
We really want to be a bank, but however we have tried over the last many years, we have not been allowed to.